Yeah, so I'm Franziska. When I was at university, I studied economics with a focus on banking and investment and financing. And I planned to start my career in investment banking. And then I stepped into, I think, the best summer break ever. And I joined some crazy creatives, and we founded together the German part of a digital agency that was mid-90s. And from that point, I started interacting between technology, business, and the market, the human perspective. And everything we delivered, since it was the very beginning of the big digital business models, that was always future driven. And I learned that if you want to make a change, you have to overcome fear. You have to start a bit always from the human perspective. That's always the best point to start. And it was always aiming for a future approach. So nothing that could create return on investment directly within 3 quarters, but something that works after 3, 5 to 10 years. So I did that for big B2B and more complex B2C products across the world, and for sure with a strong focus on European markets. And I think 10 years ago, there was one client asking if I could help them to increase the numbers, the sales numbers, and the whole conversion rates on loans. And that was when I stepped back into the finance industry. And what I've learned is that everything in relationships with money is just not about your current account and your wallet organization, but it's about deep beliefs you've learned from family some generations back. There is a big societal pressure on money, and that the standard finance services do not really deliver on human needs. So I decided that I want to make a change in the industry, and I joined, I think, 8 years ago, a European digital bank called ING, and we established some cool new stuff there. And last year, I stepped out to really work on this idea of financial well-being, to broaden the view and really focus on human needs, and work with selected retail banks on their product offering. And yes, just as a little cliffhanger for me, it starts before banking, and not like the financial industry always claims that we need to think beyond banking. So for me, it's more human and before banking.
Right, it's a human-centered approach.
Yes.
And it starts with the human. It starts with the need of the customer.
Yes.
And so that brings me already to the question. So we have certain needs today that might already not be fulfilled by a bank, but what could happen with the needs of the customers? How would they change in the future?
I think one really super big effect that will come up is our relationship with digital technologies. I think for the moment, everybody thinking like, am I future ready? Is everything I'm doing for the next quarters okay? Can we stick to that software version? And we always have this standard setup in mind when we develop something. But I think this standard setup, the mainstream setup like iPhone, iOS, and Android, and latest 12 plus versions, I think that thinking is not enough, because we have so many different setups and relationships with technology in our society. So we are always talking like Gen Z or Gen Alpha. They were born directly with an iPhone installed in them. And then we have the elderly people. Some of them are super technology fluent, and others feel like, I don't know, I have inner barriers. And thinking about how services develop and artificial intelligence is implemented, we are doing nearly everything with a digital approach, but we exclude a lot of people. So I think that's bottom line, one of the biggest trends I see, beside the whole economic and societal transformation we need to do. Thinking about finding a new balance as a society across the planet, which means that we need to find a new balance. And balance means some have to hand over something and others should receive it to create something more out of it. So, and their money also plays a huge role. So it's kind of accessibility, the one thing, and the other one is creating new habits and a new balance.
Yeah, accessibility, and that makes me think of people have really different needs. We are all individually completely different. We have neurodiversity. We have different abilities, disabilities. We maybe we can see very well, we cannot hear very well, and other people like to see colors. Other people are colorblind, and all these different needs, right? How would even a bank address all this?
Yes, they have to. There is a new regulation up and running on a European level that accessibility is one of the core targets. And the moment you start thinking about how an IT system is built and how not easy it is to change anything like the contrast, the colors, making it that people could listen instead of reading stuff on the screen. Next year, everybody has to be accessible with their IT systems for customers. So this is a European law, and most of the people will have, or the companies will have a problem, I'm pretty sure, because this is extra money they have to invest, and on accessibility, it's not in the first run creating any return on investment. It's just something for, that you have to do. So.
And keeping it easy for customers is not only important for older people with that are maybe disengaged with technology a little bit, but it's also for younger people, Alpha, Generation Alpha or Z. I hear all the time, it's nice to keep things easy and simple, right? So how does that come together in a more complex world to create things that are easy and simple for all kinds of different neurodiversity and the diversity of people? This is for me still a big question, how banks can do that.
Yes, I'm with you. And I think there is not that one solution that will make it happen. So for me, it starts just having a human perspective, broadening the view, and try to understand the different needs. And yes, they are super complex, and maybe you won't match everybody in 100%, but starting offering something that really solves human challenges and makes it easy to interact with it. And accessibility for me is really more than just making it easy and readable. It's also like making it low barrier so that you love to interact with something that is naturally maybe not your most favorite thing. And for me, interacting with money for most of the people, from what I've learned from all the studies and observations I did, a lot of people really struggle with having a look at their current account and the money status. So they postpone it to a later date, and then, it maybe is too late to make really an impact on your financial situation. So making it accessible also means making it human and digestible. And I think this is where it starts, from the people thinking about what to offer and the contents, the services to create. To reflect the diversity that we have in the market. And at some points, I have the feeling we also in that industry, and not only in finance, but also in other industries, need to overcome that thinking that I have to offer everything myself, have to own it, like the monolithic business approach, like I'm the universal bank. And to say, okay, maybe I'm not really good in that segment, but I can collaborate with a top player there. So to integrate this niche perspective and deliver my services maybe via this partner, that could also be a very interesting approach. And thinking about the bank you're mentioning, the UK one, so they are very special. So this is not the mainstream bank for the whatever kind of market segment where you think like this is the 80% that matches everything, but they are more thinking about what is really special and what are the special needs we want to take care of, and maybe thinking about collaborations and really working as partners, for me, this is really a future concept where we need to look a bit more for.
Yeah, great. Yeah, what kind of partners were you thinking, like, for example?
So in banking, there is a strict, how to say it? People who do advisory, or we have a history where advisors are more like it's the salesperson for a very mainstream product of a retail bank. So the image of traditional bank advisors in lots of the European countries are not really good. And the regulator says that you have to really split it. So if you do advertising, it's really clear how to support the customer, what to kind of reports you need to create so that it was the decision of the customer and really well informed. And what I a lot see is now that we have these autonomous financial advisors. And for example, in the UK, there is also a bit like the trend from the States. We have financial therapists who are broadening the view, and they would normally not offer a clear product. So they would say, we recommend that you start interacting with this idea or with this pattern, or we shape a new habit, but they would not offer a direct financial product. This is something where somebody else needs to step in, traditionally a retail bank. And I see that this kind of collaborations could be really valuable for the future, that you say you have specific, more individualized kind of therapists or service people talking about the financial relationships, and then you have somebody who offers the products, and you split between that. Nobody gets a provision for selling you some stupid stuff that does not fit your needs. That could,
yeah. Yeah, so so there's of course two things. There's a day-to-day banking, like payment, bills, invoices, and all that. That is something that people want to do just quickly and on a day-to-day. But then there is this other side about financial consulting, and that's where things become interesting, I think, where you assure, especially when you are financially not stable and you are maybe really concerned about how to manage your, like, let's say, older age, or how do you plan that there is a financial consultant there inside this bank environment, but all in one bank. So you wouldn't even know it's a partner. Maybe it would be not so visible. Is that right? It could be inside the bank.
It could be, but at some, so we have different, what I've learned is that there is different mindsets of people and what they need and what they ask for as a service. And there is, for example, one, I would call him, he's very active and he's very standalone thinking. So he wants to solve everything himself. So he's not really relying on everything like advisors within a bank. They would use them just as sparring partners or just checking if there is any good conditions available or any nice pricing, whatever. And then we have others who are a bit like very passive in their interaction with money, and they always need somebody who pushes them, so motivates them, inspires them. And that could be with a bank. Sometimes it fits very well. So even bank advisors have, or coaches have, a special financial mindset, and sometimes it's a natural one, and sometimes it's like it does not fit. And so sometimes these people need their private role models, or within their network somebody who is kind of like them and who could act as their big role model. So an advisor or a coach or a sparring partner could be with a bank, but it could also be a freelance one somewhere outside. So I think you don't have to mix it like we have it in lots of the retail bank setups. And I think that's also because of how the industry was created, or what they've learned and the regulator did. And currently you split between tax, insurance, and bank. But all three of them work together as a money system. So earning spending taxes, also the insurance part. This is something that comes together in your own financial setup, and nobody helps you. So a bank only sells you, if you need money, I lend it, and if you have money, give it to me, I invest it. But this holistic approach of creating value, sometimes you need to have money that works, and people are not used to work with money. So sometimes, for example, you invest into a new apartment that you rent out, and that could become a super future money saving idea. But banks would normally talk with you like, this is the brokerage account, or you do some savings. Now the interest rates are much better, but nobody's talking about how the whole system works. And I think this is something where it is really interesting to collaborate with others. We only know that from the super wealthy people. So there you have these financial coaches, or sometimes the financial officers that run everything and that bring these perspectives together. But for the people who would need it most, with the little incomes or the real struggles with money, they won't get that kind of support. And I think future where we could create new momentum and better stories about monies and really helpful content.
That's great. So just like there are different categories of customers in different life phases, when someone is in their 20s, they have a bigger they have that bigger investment span. They can do an investment of 10 years, it's no big deal. Someone who's 70 can maybe do that. So just like there are different customer categories, there could be these different categories of financial therapists that can be hired as freelancers somehow and be partnered up with the right mindset then. Yeah.
That would be really lovely. And I think some of them could be institutional for people who needs to have it that way. Others could be more freelancers, but you need to look for the quality and to assure that they won't sell you some stupid stuff. So this is something what we see across Europe currently. We are talking a lot about financial literacy and how important it is that people understand the basics. And there's lots of examples currently at Instagram and TikTok where we have these super creators, but nobody is really checking if they're telling you weird, wrong stuff, or if it's really valuable content. So we need kind of, and this is what we should never forget, there is a reason why this whole financial sector is regulated. It is really needed that a regulator takes a look, that we are not creating nonsense there and stupid new products that only deliver value to the company that brings it to the market, but not to the market itself. So this space with financials is a bit sensitive.
It is dangerous, right, to always listen to like one channel on TikTok where someone explains, oh, you need to hoard cash and put it in a pillow or an envelope and keep it there. I mean, there is a trend right now about this kind of cash hoarding, and it is very one-sided, and none of it is regulated. Everybody can say their opinion. Yeah. And now we have AI, you can produce this content yourself, and it might absolutely be far from any accuracy and precision or any kind of regulation. It is so far out, and it can be circulated, these kind of news. So the bank can also stand for trust. That's the one place you go where you know what they say. That's...
Yeah. Trust is, I think, the most important word in that sector. Definitely, trust is so important. And I think what we should always keep in mind, trust has to be earned again and again and again. It's something that you need to realize in all the relationships and conversations with customers. And this is what I truly like about the statement from the UK bank, that they say what they listen to what the customers don't like to make it different. And I think that's really important, because when people don't like something, it really reduces the trust level. And I think trust is a very complex thing. There is a lot coming together, and there is not just one measure to say I'm in a good bandwidth, or we need to do something. So listening and doing good observations, understanding the different needs, that's really a baseline for trust creation.
And it is, yeah, usually the relationship that creates the trust. But now as a digital bank, they don't have branches. And so how do you create a personal feeling? Like, do you think a person is needed, or can it be in a different way, the trust creation process?
I think I love the question, and I think there is several answers possible to that question. So first of all, for me, technology can create feelings, and technology can create a personality. I was like, when I interact with Google, for example, Google search, it feels to me a bit like a naughty little thing. It distracts me, it delivers some value, but it brings me to corners of the internet where I think like, damn, I lost all my time. I was well entertained, but it was not really efficient for the moment. So Google has a bit this character of it's helpful, it's entertaining, and a bit naughty. I think, for example, my iPhone also I have a personal relationship with my iPhone, but damn, it's just zeros and ones and a bit hardware around it. So what I've learned over the last years is that you can translate a brand personality and into digital personality. The way it interacts, the way an application is structured from its information architecture, the whole process design. This creates definitely a personality that can create trust. And the other part of the answer to your question is that I did over the last years a lot of interviews and prototyping with self-services, digital self-services. So, for example, I did one thing. We tried to motivate sounds a bit too big, but to help people to engage with their own financial situation. And we tried to convince them or create trust that saving on a just traditional saving account or in the pillow is not a good approach. And what we've learned that a lot of people are really afraid to come up with their questions, to raise questions. They think they're super stupid, and this is why they would never ask these questions a real human advisor. But what we saw is chatting with an application and doing some scenarios and radio buttons to understand the effect of this versus that and why did it came that way, so that a digital application could really help them, and they start trusting this application. It had a good company behind, but also their own strength. So they were educating themselves, and they felt really ready to solve the problems or their financial challenges themselves by using a digital service. So a human wasn't needed. Some of them were asking at the end, could I just talk with one person to understand, just as a reconfirmation, like, okay, Ulrike, I did this. Do you think it's okay, or did I miss something? And then you would say, what did you learn here? Yeah, it feels good. Like, okay, when you feel ready, then I would say go. It's never better than just starting out with stock, buying some stocks or whatever. So I think, yes, self-services, digital self-services are possible also in the financial segment. And they create trust, and they have their own personality. This is what we can see all over with how they feel, the applications. They feel different.
It could be a bank-created AI chatbot that's very smart and is also acting and according possibly to the customer, because it has maybe been trained by the customer and with the data of the customer, right? So it's a really next level chatbot.
Yeah, well, but I'm always a bit like, I had lots of conversations with ChatGPT on financial well-being, and I was a bit disappointed, but then I understood why. I always get back this standard bullshit answers, and it's what's up and running in the traditional market. But I think when we talk about future topics that need to evolve, what I see is ChatGPT can only use what's there currently. And if we talk about future topics and new contents that need to be created, I think a traditional AI is it's not the right place. So this is something human brains need to create. So this I feel like if we want to create new habits and there's only the old stuff in there, the answer would always reconfirm existing stuff, but not create future stuff. This is where I always stuck a bit in the middle with the AI thinking.
Yeah, that's exactly. I mean, I understand 100% because I think it's useless to create a future scenario with ChatGPT because it goes only up to 2 years. Like it goes up to 2020, 21, but it doesn't have the last 2 years of information. And then even that would not be enough. No, I'm more thinking of a future product for the bank would be to create their own bank AI chatbot of potentially like it's a personal assistant who has been trained on the data of the customer, and it would be really a knowledgeable AI chatbot that has all these different answers according to the customer.
That would be great, yeah. And I think what so thinking about the dialogue, the versions, the bank AI or the bank chatbot versus the customer, this is one direction. What I think a future could be really interesting for the future is creating communities and dialogues cross different people, and that you have multipliers that talk for the bank with others. And that your customers influence each other, and the bank is more like the enabler, but not always the I tell you what to do, but you can talk with each other to share, because this is what I mean with before banking. A lot of stuff is not happening because you do not know where to start and when to start, and so you're postponing it, and then time is really running out, especially when you think about the time frames for investing. And what I always find remarkable is how positive people react to impulses from their peer group. So if you would tell me I did this, and then it's directly something where I think, wow, when Ulrike did it, she overcame her barriers, and that motivates me. So I should start it now too. So
Yeah.
Where I think banks could also create that community space, a safe community space where they would just check if the contents are really good, and where they become your sparring partner, but on a true real eye level. So it's nothing where they always say, I'm the ruler of everything. No, I'm more the enabler.
Yeah, more like a two-way street. Yeah, it's an enabler, and I love the community idea. And that brings me also to the question now. A lot of people started with their cryptocurrency, some other people like cash. So what kind of digital or non-digital currencies do you think will be there in 15 years from now?
And that's a good one. I think what I honestly don't like about the crypto thing is that we have some rare super influences, like when Elon Musk is sending a tweet on his preferred cryptocurrency, so that it's now okay to pay your Tesla with blah 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 on cryptocurrency. Then he increases the value just by one tweet. And they could also kill it just with one stupid press release. So this is something where I think that makes it a bit too... I'm not a big fan of that thinking. So a bit more stability is needed to really create trust. I don't want to value anything if the existing system is better than a future one, but I think we should be aware that the whole financial system is quite easily to manipulate, and that it's really important to keep an overview and to have a real exchange platform like we have the stock exchange and the money markets. And that's something where I'm always with the cryptocurrencies curious to see how it will evolve over the next 15 years. If we have a fair exchange opportunity, or if you're stuck in a system and you will lose money because you can't overcome this box to jump into the other one. So having these markets and having it fluid between the markets is something that is for the economic system really important. The other thing about the digitalization of the money standard is something on the European level that with the digital euro, the whole central bank is discussing at the moment. I'm not sure if we really need the digital one. They hope that we can keep the amount of money in the market a bit better controlled, and that we can go against money laundering and fraud. I'm not sure if it's getting better when it's just consolidated in one system. Maybe the truth is somewhere in between. And I think in the European setup, it's quite good that we have the markets, the countries, and now we have the European collaboration. So putting everything in one box, I don't like it. But with the crypto thing, I like a lot of things. I think it will need a bit time to evolve and elaborate what makes sense and where we should stop and what to add.
Mm-hmm. Yeah, there are no regulations there, and it is volatile, so it's very hard to even go into this. You would need to be very free thinking and also be okay losing.
Yeah.
So, which is then does not bring us into a banking.
Yeah.
It's not about banking. Mm-hmm.
I think if you have some money left for just gambling, and instead of going to the casino, you would say, okay, I go in crypto, whatever, and try it out. But then you need to spend a lot of time to be up and running with the latest developments. So it's nothing where you could say it's saved somewhere on the saving account and ignore it for the rest. We need a good, healthy relationship with interacting and working with money. And then I think crypto is okay, but you need to be well prepared and interested into it. So it's not open for everybody, for the standard user, I would say.
But there could be, of course, digital currencies that each country or group of countries has their own digital currency, possibly.
Yeah, or the international standards so that you can interchange the values in between. And this is what they tried to do with the digital euro. But then the question is then the European Central Bank the one core universal digital bank for all over Europe? And what is the role of the other banks? So they change the whole system. But let's see. I'm really curious. I'm open for all the change, but I think we need to rethink better twice, because the whole money thing keeps the system up and running, and it's a bit tricky to make the big radical changes immediately.
Yeah. So then one last question is coming back to the very beginning. So the bank asks us, how might we deliver and grow our products and services to meet customer expectations and differentiate ourselves in the market in 15 years from now? So yeah, so it's bank-centric, of course, this question, but we went already to the customer. So now we are thinking, what could the bank be doing?
I think they do a great start with listening to the customers. Now the question would be, what kind of customers do they have already? And do they ask the right customers, or is there any opportunity to grow the whole base and to create even more relevant services also to the next group of people? I think how to grow it and how to stay relevant is keeping in mind that money is not just on numbers, but it's the brain, the heart, the soul that comes together. And money, the funny thing is, for a lot of people, define their value, also their inner value. So I think we can do a lot with the financial industry if they want to stay relevant over the next 15 years. I think for me, the whole topic of financial well-being is very interesting then, because the moment people feel financially enabled, feel financially fine, they are ready to conquer the next level in their life. And that to me means to become really, to invest their energy to shaping the future. And that is so much needed to come up, to overcome fear and to overcome the status quo, to think how can we deliver future values to the whole planet and to our future as humanity here. So I think listening to people is the right way, and then consequently really delivering on the needs and growing step by step into the next level is a good one. And when they start from a niche, then there is lots of opportunity to grow into next levels. But not only numbers, it's really the soul and the whole emotions around money and the beliefs. I think they should keep in mind. So when they ask the questions, they should ask themselves, do we ask the right questions and the right people, or is there anything else that could be interesting to enrich it, to make it even more relevant? That would be my answer. And I'm a very open one, but there is a lot that you could do, and it's always interesting where they see themselves for the future and how we could help them grow the relevancy in the human space.
Oh, thank you so much. I think this was it felt very empowering the customer and empowering the bank.
Yeah, the moment you're relevant to people, that moment you increase your sales. That's always it's there's a reason why Apple is so good. Steve Jobs came up with that. You need to touch people's heart to really create some actions, and he's so true. It's also Kahneman who says we have the slow and the fast thinking, and both need to come together. And that moment it creates relevancy, and we feel good, and then we act. And act means we buy something, we change behavior, we change banks, whatever. But there's something we do, and we are not standing still waiting for whatever. To all the big companies at the end, if they do it right. But it starts with the human.